The U.S. Federal Reserve, Fed, has continued to keep the reference interest rate unchanged at a 22-year peak and signaled that it still plans to cut interest rates many times this year. As expected by the market, the Federal Open Market Committee, FOMC, decided not to raise and kept the reference interest rate unchanged at 5.25 to 5.5%, the highest level in the past 22 years. In the previous 4 meetings, this agency also kept interest rates unchanged. The Fed has raised interest rates 11 times since March 2022 to curb inflation. The Fed expects 3 more reductions in 2026 and then 2 more in the future until interest rates stabilize at around 2.6%. Fed Chairman Jerome Powell said the central bank itself has not determined the timing, but he predicts interest rate cuts will still take place, as long as the data is consistent with the Fed's view. At the press conference after the meeting, the Fed chairman emphasized that the Fed cannot be confident that it has won the battle against inflation. He said the Fed is prepared to maintain current interest rates longer if needed. In addition, the Fed also raised its GDP growth forecast this year. Fed officials say the U.S. could grow 2.1% this year, higher than the 1.4% estimate last December. The unemployment rate is also expected to be 4% by the end of this year, down from the previous forecast. Experts say the Fed does not want to cut interest rates soon. If they fail to control inflation, it will lead consumers to believe that inflation is likely to remain high. At that time, the fight against inflation became even more difficult. However, the Fed also does not want to maintain high interest rates for too long, because it could hurt the economy more than necessary, causing workers to lose their jobs and wages to fall. While the market is waiting, the Fed is still cautious with cutting interest rates to avoid the risk of inflation returning. Therefore, I think this session the market is waiting to see if the Fed can get on the right path. 3 reductions as originally planned. Meanwhile, the increase is mainly driven by positive information in the artificial intelligence (AI) segment, said Mr. Chris Carey, an expert at the company. Carnegie investment consultant, commented to Yahoo Finance. Markets had to quickly adjust to the Fed's approach, rolling back the timing and reducing the number of interest rate cuts this year. At the beginning of the year, many experts predicted that the Fed's interest rate cutting campaign would begin in March and cut a total of 6 to 7 times, with each time being 25 basis points. However, the market has now pushed back the prediction of interest rate cuts to June, and there may only be 3 interest rate cuts this year, matching the Fed's forecast.